Tom Cloud with my bi-monthly precious metals market update. Kind of a hodgepodge today I want to go through as we end the year. I want to start by, we've had several calls about what's going on in Lebanon, and to think that they're robbing banks. People are just going in like they rob jewelry stores in New York and Chicago and San Francisco. We're seeing just go into banks in Lebanon and just take the money. There's not police to stop them or anything. And then the people that are getting their money taken are coming doing sit-ins saying, don't let our money out. And it's turning into getting a lot of attention. We don't know what happened if anybody tried to attack a bank in this country, meaning the thugs that break in these jewelry stores and retail stores all over the country. So we look at this and say it never happened in America, and hopefully it can't. But it is something that has been sent to me by 2 or 3 different people that thought was worth mentioning. The biggest story is the budget deficit. I mean, we've soared now past 32 trillion. And remember, this is only the debt of running the government, how much they take in through taxes and how much they spend. They take in about 3.5 trillion and they spend about 5 trillion. So there's 1.5 trillion that's called the budget deficit. So you look at it now and realize that we've had 4 interest rate hikes this year. We're up about 4%. And think about 4% of 32 trillion. And this is just in addition to what's already there. So 4% of 32 trillion is 1.3 trillion that is interest. It's interest. That's it, interest. Now think about it. When the interest rates were an average of 2%, when you took all the different maturities of government securities, just a few months ago, it was the average interest rate was 2. Now it's up to 5. So there's a 3% or nearly $1 trillion difference just like that, and that's money that is not going to be that. But the most important thing is who owns that debt. Chinese, the Japanese own somewhere around 15% of this $32 trillion debt that we have on the operating of the government. Now, we've just seen the government, through Congress, authorize a lot of money for defense, which I certainly agree we need to do, but unfortunately, it does run the deficit up further, and we're going to go through the next trillion so fast, you're not going to believe it. And all it's doing now is starting to hurt the U.S. dollar. When uncertainty hit the market and people moved to equities earlier in the year, all of a sudden people started saying, I'm taking my money out of the bank, and where am I going to put it? And we see that the Japanese and Chinese have the biggest amount, and they could crash the whole U.S. securities market at any time they feel like it if they wanted to by just liquidating that debt. So we've got to look at and realize that that's one thing. We've got banking problems worldwide. Look what happened at Credit Suisse with over $1 trillion in losses, one of the biggest banks in the world. And then inflation. Inflation came out of nowhere in 2022 here. And we look at it now, and we're hearing how great inflation's been brought down 15%. Think about how crazy this is. It got up to 8.2. It's now down to 7. It's still 7% inflation. Still the worst it's been in 40 years. And yet, our government is celebrating that inflation's dropped 15%. But that's the kind of crap that makes you sick. You've got to look through it and decide where you want your money. What do you want to do with it? Are you going to sit there and let inflation eat it up? Or put into something that goes up with inflation, something you can't print, something you can't create out of thin air? And it certainly goes the big boy. It's such a big boy, as I said earlier, it's the only investment index here with a week left in the year that's right even. All the rest of them have lost money. stocks, bonds, S&P, all the different stock indices, they've all lost 8 to 15%, while gold has done nothing except make you real purchasing power because you can't print it, you can't make it up. And next year's going to be even bigger because now we have Basel III kicking in where central banks can buy an own bank and put it on their balance sheets. And this has already started with China, who has already started doing this. So just be aware. And let me just kind of go through a couple of closing things. Goldman Sachs this week announced they were having to fire thousands of people. They're telling you what the economy is going to do next year. We know it's going to be in a recession or stagflation. The best is miniature growth, like 0.5%, because it wasn't negative, it doesn't go into a recession. Or do we go in? Well, Greg Johnson, who I mentioned on this show from time to time, the chief investment officer for Bridgewater, the biggest company in the world, who, by the way, 1 year ago right now was the only major money manager that got it right on investments. Every other money manager said stocks, we're going to have a great year, different degrees of great year. But they said last year, Ray Dalio and Greg Johnson said no. Last year was a year to go to gold because the problem's coming. And here they look great today, and now they're saying next year is the year of gold. So it's not just last year, but this year. And Greg says he thinks the recession that we're going to have next year is going to be double the length that everybody else is talking about. It's not going to be that it's real severe. It's just going to be that it's negative growth, and therefore it goes into 1 quarter and then 2 quarters of negative growth, and you have a recession. If it goes further, you can get a depression. I'm not calling for a depression, and neither is Greg Johnson. Mike Wilson over at Morgan Stanley, he looks for a slowdown in a recession in 23, just like Greg Johnson does. So here's one of the biggest brokerage firms in the world managing your money and telling you that this is not where they're recommending. They're trying to help you move the clients of Morgan Stanley to help you get in better places right now. But the best statement I had through all this happened this morning. I was talking to one of my large clients, and he said, I want to thank you again for convincing me to move my cash money. He said, I was worried the bank's going to close, and he said, I still am worried that there's going to be a major bank crisis. But he said, just think, I bought that gold last year from you, and here a year later, it's done nothing. And I love it because it's my only investment that's done nothing, which means the only investment didn't lose. So this year is even going to be bigger. Clients I'm talking to are moving out of paper investments and realizing, even people that really are stock oriented are saying, I need to bump my percentage up in gold and silver. Silver's a little more risky as an investment because of the economy and all the industrial uses. Gold is money. It's recognized in all 28 world markets. It is money. That is what you want to have. But just think, as the guy said earlier today, if I want to cash in, I'll get all my money back. He says, when I buy my homeowners, my car insurance, my boat insurance, he said, I hope I never have to do make a claim. But he said, if I do, I've got the insurance. But he said, what's great about gold is I don't have to make the claim. I go back and cash it in and make money off my insurance. Get all my premium back, plus probably a nice profit. So lastly, Michael, some of you follow cross-border capital out of England, and Michael Powell, his #1 investment for next year's gold. So I've given you 3 major, and there's many more. I don't have time to write them all down. But as I've mentioned along the way this year, there really scares me there'll be a time. Right now, you can liquidate gold anytime you want. Instant liquid, we can set you up. Lowest storage fees in the world, and instant liquid when you're ready to sell them. But it really concerns me that I keep talking to my old buddies in Europe and thinking, I'm just worried there's going to come a time maybe this year that you're not going to be able to buy gold. It's just not going to be for sale. The people are going to hold it. Central bank's going to hold it. And it's not that you can't sell it. You just won't be able to buy any more for yourself. And I do believe that could be a real possibility. So anyway, I want to wish each of you a very Merry Christmas. It's a very special time of the year to realize what Christ did for us at the cross, and something that's the greatest gift ever given. And I hope each one of you have the gift. If you don't, I pray that you'll search for it. It's just a special time here to be alive, and it's a special time to pray and to seek knowledge and wisdom wherever you can find it. And certainly Dan and Catherine and I wish each one of you a special time with your family, and just pray that your investments for 2023 will be good. If there's anything you can, any help, give us a call, 800-247-2812. That's 800-247-2812. And if you don't have a precious metals IRA, but you have a 401k and you're going to split that when you retire into a self-directed IRA for gold and silver, self-directed IRA for stocks. We have hundreds of clients that have done this. If you haven't, give Dan a call in our office, and he'll be happy to go over it and help you get a custodian. Until next year, this is Tom Cloud signing out.